Roofing claims may change forever as Verisk, who owns Xactimate, will own AccuLynx. This is a $2.3 billion deal, as far as I know, the largest in the roofing industry. And I'm joined here today with John Senac, fellow mentor in RSRA, as we talk through what this will mean. We're going to go through the actual investor deck and talk about what you may want to do to get yourself prepared for what could be coming. John, dude, thank you so much for being here. I messaged you late last night, and here we are jumping on this morning. So
Thank you. Looking
yeah,
forward to it, dude. This is the stuff I love to talk about.
yeah, our industry is changing really fast, and a lot of folks aren't quite adapting. And as Joe Polish says, where there is anxiety, there is opportunity. And a lot of people are seeing doom and gloom. There's things that people like, don't like. And the purpose of this video is to break down objectively what we see, let you draw your own conclusions. We'll share our own predictions, but I just need to be real clear. These are our predictions. This isn't fact. Neither of us have the inside information that we would leak to the world. So this is objective. Again, what I'll be going through today is sharing the actual investor deck from Verisk. This is straight from Verisk's website on the pending acquisition. We'll talk through this into the little back history of the two largest shareholders of Verisk, and then our predictions. But John, before we get into it, what was your reaction when you first heard this news?
I had two instant reactions. Instant reaction number one was business owner reaction. Good job. You just broke the record in the roofing space as far as like softwares, techs, mergers, anything like that. And which is crazy because a month ago, roughly, we had Nearmap buy ITEL for $1.3 billion. Okay. So this almost doubled that deal. So my owner reaction was like exactly what you want to do. Build it, scale it, grow it, exit it, or hand it down to family. Like phenomenal job. My contractor, right? Like the contractor space that I'm constantly around and working with was like, oh my God, people have said this for years. Like, I'm not comfortable with what data they keep. And that concern just became real.
Yeah.
Like that.
Yeah. I had a similar reaction. And one of the things that I feel in my heart is a desire to protect the little guy. The roofing is a beautiful opportunity for regular people to create incredible opportunities in their lives. And with consolidation and what I see coming on the claim side, which we'll talk about, it's a little disheartening on the personal side. Now, this is my own views. This doesn't mean it's fact. But with that being said, let's jump in. Now, objectively, what I'm going to do, I'm going to share my screen. We're going to take a look at the pending acquisition. This is the actual slide deck pulled from Verisk's website. And if you scroll through this entire deck, which is really interesting, especially as you look here, their adjusted EBITDA margin, I want to highlight this. What do you see when you see this? What number is that, John?
It's a pretty nice number.
Yeah, it's healthy.
Good God.
They're doing really well, especially for a company that's at $773 million a year. They've had quite a few acquisitions in the past. 2006 is when they acquired AccuLynx, and they're in the data world. So for those who are unfamiliar, Verisk's secret sauce, so to speak, is in the data world for insurance. So one of their more recent acquisitions, which I have to pull the name, I've got that pulled up. Give me one moment. Is Surance Bay. That's more for life insurance, and that's correct. In this deck as well. But what many people don't know, I saw some comments on Facebook saying, now's a good time to buy stock. Well, Verisk is the largest shareholders are institutional shareholders. Now, what does that mean? That means it's big companies that are the primary shareholders. Guess what the top two are?
Wait, the top two?
Top two shareholders.
BlackRock and oh my God, I know him.
Yeah, Vanguard.
And what?
Vanguard.
Oh yeah, there you go. BlackRock and Vanguard. Now, and what are their portfolios?
Yes. So then when you get into their portfolios, you're going to see, and it is more difficult. I need to give a disclaimer because when I research what percentage of their portfolios, Vanguard or BlackRock, is involved with insurance, you get one number. If you specify property and casualty insurance, you'll see other numbers. What I can see is pretty sizable. So again, one source, which again has been tough because it's variable, and again, funds can change, was around 8.8% for Vanguard. BlackRock with over $400 billion dollars, or $4.4 trillion fund. So that's interesting fact to get us started. So now let's get into this report. And John, I actually only found this. I've spent a lot of time researching this since the news broke, but this is again the actual deck. So let's go through this objectively to take a look. Now, the strategic rationale is this is things don't really get interesting until here. Many assumptions are flying around Facebook at the moment, and that's why I wanted to bring up the Verisk deck. This is what they are presenting to their investors. This is their strategy. As you can see, Verisk's property estimating solutions, they're bolting AccuLynx right into the claims process. Not really groundbreaking information, but listen to a few of these, and I'm going to highlight a few words, and I'm actually going to share with you some exact language from this press release on the announcement. Remove manual work and improve information flow between carriers and contractors. What are you hearing on that one, John?
I hear what insurance companies really need to save costs on, and that is administrative cost. Okay. When you remove manual workflow, you remove administrative effort, administrative costs, people, a payroll, a very big thing in there. Okay. So the first part of that is removing administrative costs. There's a lot of costs in administering claim. The person at the desk, the person who takes the call to start the claim, the person who's going to manage the claim from cradle to grave, the third-party assistants that are going to go out there and do that. If they can streamline most of those costs out, you have a massive administrative cost savings in there. Now, improve information flow between carriers and contractors. I think the word improve, that word is the most selective word in there because the word improve changes depending on what lens you're looking through. From a contractor or from a carrier standpoint, improving means you have now sped up the timeline. You've made it fast for your end user, your customer, your homeowner, you're insured in that situation. So you're improving the workflow and the communication between those two parties. So the person who's actually insured, your client, gets results faster, which helps with retention. This is another big area where the insurance company really, they want money to be managed well. Okay, it's keeping the premiums instead of having to find new premiums, and it's minimizing administrative costs. Everybody's been doing this wrong for years. All these right to repair and preferred vendors and MRPs and everything else, their roofer marketplace, again, disclaimer here, I'm not dogging it, right? But their goal is to get 3 bids, and that drives what down? The estimate down. It actually doesn't save all the cost and help with the retention piece. It still ends up being long and drawn out. So that's what I hear in this bullet point is they're actually trying to accomplish on their end where cost savings and retention start marrying together.
Yeah, I'm seeing the same thing. I'm going to hit these bullets. I'm going to bring up a quote from the press release. Drive efficiency and accuracy for network participants. We'll get into that via straight through processing and more accurate pricing data. Now, interesting enough, what does that mean? Again, I like what you said before on the lens. Access to highly valuable roofing data to enhance analytics and benchmarking. And then this other one, incremental revenue opportunity through a number of levers, including cross-sell, upsell. And my understanding on this is opening it up where now you beyond roofing, because you'll see in this report, the TAM, total addressable market, is set to increase for them by 9% compounding annual growth rate. That's huge. But let's take a look. So this is the actual press release on Global Newswire, meaning, again, Verisk Analytics wrote this and released it. That's a press release. As we scroll down here, there's some interesting language. And I have the quote written down, but I want to highlight it for you. Here we go. Policyholders can benefit from quicker repairs due to workflow efficiency and cost savings driven by enhanced pricing data. What are you hearing there?
Let's break down some of the, again, I'm going to take the lens. The word enhanced, we'll just work backwards through this. Okay. Yeah. Enhanced. Okay. Enhanced for the insurance companies, or enhanced for Verisk. Verisk has a pricing department that has, I believe, don't quote me on this, about 60, 70 people working for the pricing department, and they collect all this pricing data and get it together. I've got really good friends that live out there, are affiliated with Verisk, know this process, right? So from their lens, they've enhanced pricing data because they now are going to have a direct pass through to see all the APIs and connections for ABC, SRS, Beacon, suppliers, UXO. All of those are now, if they're directly fed into a person's AccuLynx, they're going to see real-time pricing in every market, actual material costs. So is it enhanced? Yes, it's enhanced. But as a contractor, I may not like that. I mean, that may not be my choice of descriptive words there in that, right? I want to know that pricing that's being fed through. Is it the standard price? Is it my vendor price? Can they see rebates if those are in the system? Like, how enhanced is it at this point? Because we already know from ITEL, there's this massive drive to control material pricing across the board. That's actually one of the bigger things they do. So yeah, man, there's a problem in the lens there. And again, if I'm sitting on that side, brilliant move. If I'm sitting on the contractor side, there's things that are red flags to me here. All right.
And the biggest concern I'm hearing is privacy. Now, all of the financial information, as you mentioned, what you're buying material for, how much you're paying on labor, and your profit per job. There is immense concern over this data now being essentially directly distributed, questionably owned by an insurance carrier. And one of the things I want to get into is, could this result in pricing control, where a carrier says, hey, you're making too much money. This is how much we're willing to pay. There's ramblings that this has already occurred in the auto industry. But as we break down some of these quotes, and I'm going to share my screen again as we go through this deck, because there's a few things I want to highlight. What I mentioned, and this may or may not be as important as I'm making it, but the language, policyholders can benefit from quicker repairs. Repairs. Now, I don't know if I'm getting into the semantics saying that this is a...
I actually think where your head's going versus if I look at it, its purest form. Okay.
Yeah.
When I read my homeowner's policy, the insurance company's obligation is to repair the damage back to its original condition. That's the general theme of it, right? And, repair could be 5 shingles, a few pieces of siding. Repair could be a drywall patch and fixing a leak. Repair could be a slope. Repair could be a full replacement. In fact, there's a lot of areas that consider a roof replacement a repair because it's non-structural. It doesn't have openings. So the word repair can very much have a wide range of interpretations. I like that your head went there, but if you're if you think of it from a policy perspective, they just use the language they're used to. We repair direct physical damage. So we're going to offer you a quicker repair due to workflow efficiency. So that there's so much range there, Adam.
Yeah, no, I appreciate that. That is good perspective. And you are right on the policy language. When I wrote this quote down by hand, I highlighted the words repair, cost savings, and pricing data. But when we look at this,
Who's saving cost?
Correct. Well, we're going to get there. You should see there's more than one person saving costs, which we'll get to. But in this announcement, I just want to be real clear here. This deal has not closed. This deal is subject to regulatory approval, which you'll see in the deck later, and is projected to close by the end of Q3 of 2025. But as you look through this release that was published by the Insurance Journal, the largest and most expensive home components through insurance is roofing, and it represents more than 25% of all residential claim value. And of course, AccuLynx being a fantastic strategic partner for acquisition versus a financial partner, which I'll talk about in a minute, is because most of the company's 5,000 plus customers are insurance contractors. And for many folks that maybe the language in this M&A world or this mergers and acquisitions world, there are two main types of acquisitions. There's a financial acquisition, meaning, hey, I want to buy your company. It's a good cash flow company. I'll make some money. And then a strategic acquisition, which this would fall into the strategic realm, similar to many of the acquisitions that have been happening in the tech space and roofing, saying, hey, we're this data company that serves insurance companies. You're a CRM. They're not buying it for the revenue. They're buying it because for the primary driver of the strategy that this data unlocks for them, which is what creates a higher multiple. So for many people, like, oh, there's got to be a reason. Yes, it's because they're a strategic partner. Now, look at this.
So the revenue from it is revenue. That's pretty fixed. Okay.
Mhm.
So you have the revenue stream. We know that that's a minor part of this. We know that the data is a major, major, major part of it. But I
Mhm.
think one of the words that I pulled when I was looking at all the press release was augmentation between platforms. The cost for them to go build something that would be augmented between the insurance restoration side of things and the contractor side of things would require not only the build costs, but then the user engagement, the marketing, the build up of the client base and things like that. So part of this purchase is if they truly believe that they can augment the software to streamline down to one estimating software or everything talking together, they've saved themselves multiple millions in costs of development, building
Mhm.
up a client base, contractors using it, things like that. So the acquisition of partial data and totality of data was a big piece of this price ticket. But then again, they foregoed building a machine and said, let's buy a machine that we think can be converted. And that word augmentation was in a couple of the press release. And I think that was a key word I picked up on. They want to use this to shape it with what they have now to kind of go, with our powers combined, we've put this all together, right? So anyway, continue.
And the reason I wanted to work off this deck is there's so many theories getting spun around online already that I haven't seen anyone source or cite this. And this is what they're saying. So let's look into this. AccuLynx is the leading end-to-end business management software platform for residential property restoration. Spans the entire roofing job cycle from initial lead to project close, serving as a system of record to manage operations and grow profitably. Delivers a powerful suite in embedded fintech, which is financial technology solutions, rich data sets with detailed residential roofing pricing and property intelligence, significant customer overlap. Now, what's wild, if we look off here to the right, we see TAM is total addressable market, meaning they suspect that the user base of someone who'd be using AccuLynx with this new acquisition, which could include carriers, adjusters, et cetera, is $2 billion worth. They currently have 5,000 customers. 2025 revenue is at over 150 million. 80% of that subscription. And then look at this, 55% EBITDA margin. That's like phenomenal. So obviously it's a wildly profitable company, and Verisk sees some importance in that. But here's where
Can we back up?
yeah.
Because I don't want everybody to live in the world of fear, but I want to
Mhm.
highlight the one that you said significant customer overlap with Verisk property estimating solution. Adam, as a data person, and I think you know that I have the data mind, like, you know, I geek out about all those little details. I'm trying to build things that are very data driven. Here's some crazy, crazy, wildest data analysis things I've thought of. If I'm Verisk and I obtain the software, the first thing I do is cross-reference every address that has been put in to Verisk that matches an address that is in AccuLynx to see what those are. Then what I want to do is extrapolate. Let's say that State Farm put that address in, the contractor put that in their own Xactimate profile, so it's in Verisk twice. Verisk Value 360, which is their underwriting tool, that address is in Value 360, right? So they take their underwriting tool, they write a software for agents. Okay. So they take the agent software and they figure out how many of our softwares does this populate in. Now let's get really scary with that data. They look at the State Farm estimate in Verisk and see the total is 25,000. They look at the contractor's estimate in Verisk and see that it's 27,000. They look at AccuLynx and see that the total collected on that job was 25,000. We have a perfect scenario. It matches the insurance. Now let's say it's $27,000 in contractor Verisk. It's $25,000 in carrier Verisk, and AccuLynx says we build 22. And they start looking closely and they say, wait a second. I think these people are charging the insurance but collecting less.
Yeah.
What are the odds a handful of contractors or a slew of people land on a massive red flag list? I know they can't penalize them off of that data alone, but are they going to start looking closely potentially? So this whole overlap of Verisk, you think of how many locations the agent's CRM, the Value 360 software, Xactimate, AccuLynx, Contractor Xactimate, Carrier Xactimate, that one address could populate and how they could cross-reference data. I have an endless range my mind goes I could figure out how many times we pay for drip edge, don't pay for drip edge. I could figure out what the easiest supplements are to go ahead and add now because of their fights. There's so much cross-reference data in that.
Mhm.
Wild where my brain went with that one statement alone.
Absolutely. You get things like step flashing or chimney flashing if it's reused. People bill for it and don't do it. We'll see in this deck that they address fraud in this deck, and we're going to talk about that.
Yeah.
And I love where your mind went because mine did not go there. And that's what's fun. And I know that this video was actually inspired in RSRA in our private community app. Last night I got this news. I started doing my homework. I made a post. You chimed in, and then that's when I texted you yesterday. I was like, dude, we got to jump on and do a video on this. And excuse me, go straight to the source. So
I literally had to push a call. I'm going to be on a top 100 podcast. I'm not going to say who yet. And I'm supposed to do a call with that person to be like, hey, bud, looking forward to having you on. I was like, can we move an hour?
that means a lot to me.
This was a big priority.
Yeah, I really appreciate it. And no, so does everyone else because we're going to get this published as soon as we can. And as we break this down, here's our next slide deck. Verisk Property Estimating Solutions and AccuLynx deepen relationships and create value across the insurance restoration ecosystem. So we've got job repairs in material and labor information that can equally flow from contractors to carriers. The insurers have contractor information in claims. Oh, that's really great. Don't you want the carrier to have all of your information? And then suppliers, now we have a direct feed into material pricing and material orders, as well as data and estimates. So the added value is contractor performance information. Interesting. Tighter integration of workflows, richer and wider high fidelity data, and then job and product expansion. So as you can see in the key, this is what AccuLynx brings to the table is this key here, which is all of the data that was otherwise confidential to contractors. Now, the part that I will say is upsetting, and I'm sure that AccuLynx has some sort of clause in their agreements that when you use their software, the data is subject to whatever. But man, is that upsetting that all of your private business information that you've housed in there to run a profitable company just got handed over to a carrier. And what is upsetting to me is that I don't know any other industry where a company has anyone or any right to have inside information into the financials of a company and how they operate. I just don't. I mean, if you feel otherwise, or if there are some, drop it in the comments. But I found this to be a very interesting flow, which goes back to my theory, which will come on, is I see intense pricing control on the horizon.
I also wonder what percentage of the data is broken versus true. For example, smallest example I can give you is I talked to two contractors just this morning. One contractor has their AccuLynx 100% integrated into QuickBooks, all their financials. They literally can run the reports in QuickBooks or in AccuLynx to understand profitability margins. That means every deep, intimate detail about their business is in AccuLynx. Yeah. I talked to another one who said, no, we manually do all of our own stuff. AccuLynx is more just so we roughly know margins. You know, we don't overthink it, blah, blah. It's to produce estimates, to sign agreements, this, that, and the other. Okay. Yeah. So how much of AccuLynx mix is Contractor 2, where they're just using it as a reference and the data in there actually is slightly broken? It's not truly fully integrated into their financials. If I'm Contractor A, I'm really frustrated that all these details that are deeply connected to me, my company, my financials, and everything else is going to be available. If I'm Contractor 2, I'm like, okay, I'm not that worried about it. Like, it's rough, but it's not perfect. And they really don't know all the intimate details. So yeah, there's that loop that you just showed me. I've already thought of that loop and asked the questions to people that I'm very close friends with and realized, like, wow, this is an imperfect system that they're going to be analyzing information from.
Yeah, it is. And I have been saying for years, it is a matter of time till carriers come in to profit from the losses just as they much the premiums. Why wouldn't they? I am going to begin doing some digging, but when we see Verisk as the two primary shareholders, institutional investors being BlackRock and Vanguard, who have financial interest in insurance companies, they are literally now profiting from the claims themselves while also profiting from premiums. It would not be out of the question to have the same institutional investors or financial backing from a carrier. This is my theory, by the way, that says, hey, let's start gobbling up roofing companies. Let's create our own platform. Why wouldn't you? That would be smart business, in my opinion.
Adam, they just got the insights financially to figure out what companies they want to buy.
Mm-hmm. Correct.
They
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 did.
can start combing through and be like, "Yep, here's our top 5 people we're going to go make offers
Yeah.
to based on footprint, location, where we lose the most money on claims, what they're revenuing. Whatever analytics are their top 5
Mhm.
analytics, they get to sort those and realize, is it location? Is it where claims are most frequent? Is it where claims eat up the carriers the most, and we think we can bring the margin down and end up profiting equally on both sides? Like they were just handed the keys to that. And I don't care that there's other CRMs out there. I would venture to guess that AccuLynx has enough as the largest that their representation of that is going to be a good representation of the industry, right?
Yeah.
It's not going to be that far off the mark in any particular market. So man, there's some interesting things in there. One thing that I see taking place, and maybe I'm sure we'll get into it, is at what point we already have all these flavors of this out there. The roof marketplace, the estimating tools where they can get quick estimates and things like that. Carriers can turn things over fast. The things that are trying to save cost in some areas. At what point do they look at all this data and they go, hey, 70% of these jobs, we notice they pay a commission, and that's like 10% of this thing. We can save 10% on every job by offering contractors direct, you be a preferred contractor, you get it direct, but you only get it at this margin. And what's the contractor do? Take the job, cut the salesperson out, and just get the streamline fed in. They are going to be able to, for those people putting commissions in there, they're going to be able to see a massive, probably the largest cost savings across the roofing space is to cut the salesperson out. I see that visibility in the data.
I could not agree more. It is likely what will occur in the future as we get into new ways of selling through a new buying experience by way of technology. And I also couldn't agree more that there will be likely incentives put in place to use folks in this network. I'll move into my predictions, and I think I'd love to hear yours as well. But I do want to finish up. This is the last slide of this deck. Now, this deck is robust. It is all available, by the way, on Verisk's investor relations website. If you scroll to the way bottom, so this is public information that I'm sharing. Now it says critical residential roofing data enhancing Verisk's value proposition to insurance claims network partners. Material type, price of roof, materials costs, age of roof, geographic data, labor cost, roof type, replacement cycle. So let's go through on how they combine benefits, and you guys be the judge on what that means to you. Higher for insurers, higher productivity through automation and workflow efficiency, more transparency about contractors, better and faster data on pricing and property level information. Now, I do want to just add one note that's not in this deck. I think it is important for us to not demonize insurance entirely. The reason that their guard is up is exploitative and fraudulent practices at scale from roofing companies. There are people who call in claims that shouldn't. And there is a substantial cost to that administrative load through an adjuster coming out, admin, et cetera. So whether or not the claim is approved, that costs the carrier money. Then we have widespread abuse of supplementing where people supplement for items not conducted. Now, I'm a wholehearted believer. The homeowner and the contractor both deserve to get paid for the exact work that is done. I believe in my heart of heart, it is not right to bill for work that you do not do. I don't see a world where that makes sense. And sadly, this has been abused for a long time. There are people that teach these practices. There are folks that get excited and greedy on ways to manipulate pricing. I get it. So I just wanted to put in that little disclaimer. Now, let's turn our attention to contractors. It says streamlined, quicker payments. Now, this is interesting because carriers now, I talked, obviously, you and I, John, in RSRA work with hundreds of contractors on a daily basis. You're out speaking all over the country. You're hearing the same things I'm hearing and seeing, which is that many contractors, their accounts receivable is 12 weeks out.
Yep.
12 weeks. Now, carriers, this is my own opinion, which may not be popular, but they can strategically drag that out to bleed companies out, intentional or otherwise. And every day that they keep that money in their control, they're gaining interest on it.
Yep.
So quicker payments, that's a great little carrot to hang to a roofer. Work in our network, you get paid quicker. Next, lower cost lead generation for insurance claim assignments. Right here is a big insight into what's obviously being planned. I shouldn't say obviously, I don't have the exact answer, but when I read lower cost lead generation for insurance claim assignments, what I'm hearing is claims are being assigned through contractors in the network, and there's low cost to the contractor,
Yep.
which leads me to one of my predictions on a platform consolidation all in one with enterprise agreements for carriers and contractors. And I even have predictions that we see giants like ServiceTitan that are charging a percentage of revenue. Just a thought. What if that's the new model? We're going to get a percentage of the revenue through the jobs that are run through AccuLynx, and we're going to provide everything. And we're going to sign you the lead, and we're just going to take a percentage of revenue, and we're going to control costs. This is just my predictions. This isn't obviously, this is me reading between the lines. So an all-in-one solution for leads, payment, financing, permitting, material ordering, et cetera, that essentially lock you in through a certified contractor network, and you be able to even get ratings on performance, how often people supplement and all that. And those that play by the rules in which they wish to play could potentially have higher priority. So that's what I'm seeing here. And then access to more services and third-party data on a single platform. John, what are your thoughts when you see things like lower cost lead generation and insurance claim assignments?
Direct to repair. That's really the number one, man. Direct to repair. So you have streamlined, quicker payments. That means the payment is getting to the homeowner fast because there's an agreed price, or the homeowner can, or the payment's going straight to the contractor because you're in a preferred network.
Yeah.
Lead generation. They either put these things in a lead pool and the contractors that respond to it first get it because they're sourced through AccuLynx, right? So lead pooling or lead assignment. They use assignment in this particular situation. So lead pool or lead assignment could take place. Again, we're talking about preferred vendors or preferred networks or direct to repair networks, then access to more service and third-party data on a single platform. So that's just reiterating everything you already said. So I agree with you that we could see big deals, enterprise deals, contract deals, or guarantee. Like we guarantee that you'll have access to these, but it's up to you to access them within an hour. Otherwise, it moves on to the next person, or it's a first come first serve basis, right? So there's going to be players that are okay with this, that capitalize on it and accelerate very well on the contracting side.
Yeah, it will, I think, a whole new business model. And this leads me to the next piece before we break it down more. Look at this for policyholders. Quicker repairs through stronger carrier and contractor network. I mean, the writing is on the wall. Carrier contractor network, claim assignments. Okay. And the reason I was so passionate about using this actual deck is I don't want to share my own opinion. I want to formulate my opinion based on the data from the source, which is on a side personal tangent, how I hope all of us consume our news is just go to the direct source where you can get the full scope of what's going on and then draw your own conclusions. And I do want to hear from yours. What are your predictions? So here's the other thing. More accurate estimates lead to lower out-of-pocket costs. So lower out-of-pocket costs, John, you'd said it just now, moments ago. If policyholders are choosing contractor in this network, and again, the salesperson commissions pulled out or wherever else cost savings are manipulated, or it's the, hey, we're going to give you this lead and we're going to pay you quickly, but we're going to do it at a profit margin that we determine to be healthy and fair. And by the way, from that, we're also going to take a percentage. And again, it doesn't say that they're going to take a percentage. I just know that's business moves that are being made. We're seeing shifts with marketing agencies moving towards a percentage of revenue. We are seeing ServiceTitan, who's already done that model, making big investments into roofing. I am seeing here handcuffs in a way. This is my own colorful language, not anyone's here, of saying, hey, Mr. Homeowner, I know you have this big, scary deductible, but if you use someone in our network, that either reduces or goes away. And now
that's already happening. And there are large companies that are in those programs. They enjoy the program. somebody posted in my Facebook group about it, like, hey, we went to meet the adjuster and a contractor showed up, and the homeowner told me that if they use that contractor, they don't pay their deductible or they pay half their deductible.
Mhm.
And they were complaining about it. I was like,
Yeah,
this is like, this isn't a secret that's been hidden from the industry.
correct.
The whole idea for the longest time, the lower cost was all driven to how does the insurance carrier have a lower cost? And they're realizing now that if we can make the cost lower for us and the end user that makes the decision, they're going to be more, like you said, dangling the carrot, right? They're going to be more enticed to move into, okay, I mean, think about it. These are people who had no plans on doing their roof. Someone probably knocked their door or got solicited or got advertised or got referred. So now they're in the decision-making process and they didn't have any intention to do this.
Yeah.
If the presentation is that we're going to put on a class 3 shingle, they're going to put on a class 3 shingle. We're going to meet your adjuster. We're going to do these things. We're going to do these things. And there's no differentiation in there. Then it's very enticing to say, hey, let's go with this particular contractor because we're going to save. I actually wouldn't be surprised to see that kind of like a workmanship regulation and a workmanship checks and balances or a workmanship guarantee, something like this, Adam. If you go with this contractor, you'll actually get a 5% savings in your annual premium for the next 5 years because there's a 5-year workmanship guarantee. That's one that's not being talked about that could take place. They give them a long-term benefit, slower gain benefit in addition to the deductible benefit or instead of the deductible benefit. There's a lot of things they can do once they really start locking in these preferred vendors. And I think there's actually even going to be room for third-party groups to go in and consult for these insurance companies to vet that workmanship side of things.
Yeah.
It's probably going to force some of the relationships with manufacturers. Like, hey, we already know you're inspecting 10, 20% of these roofs that have registered warranties. We want to use your inspectors to vet the workmanship of these people. And then we're going to offer a workmanship discount in addition to this class 3, class 4 discount. There's a crazy amount of things they can do to make it super sexy for the homeowner to go, yeah, I'll take that option. Thanks. I appreciate everything you've done so far, Mr. Contractor, but I just can't pass up on this offer.
Yeah. It's, I think it wouldn't be fair to talk about the upside to some. It may not be an upside to you. It might not be an upside to everybody. But the reality is, with this level of control, one would hope that this will lead to higher quality construction experiences for people, a tighter vetting process, and reducing some of the not so great behavior and practices in our industry. The
You mean
cost
like
for
what
that,
we promote all the time in Roofing Solar Reform Alliance, stomp out the scum and the bad
yeah.
practices?
I mean, yes, absolutely. And by the way, just to clarify what you just said, John, like practicing doing things the right way, doing things that it saddens me the level of corruption in our industry, and it's
It
everywhere
does.
you can make money. But
And Adam, you can't clean up the corruption with this type of thing without hurting some of the good too, right?
there's no doubt.
Like
Which
you may force some bad people out because they just can't adapt, function these systems. They don't have the right cash flow, the structures. There's things like that going on in there. So you get some rid of some, but you naturally get rid of the players that can't keep up with this. Really, really good people whose lives are going to change and businesses are going to be affected as some of these. So it's unfortunate. We'd love to just stomp out the bad, just get rid of it in the industry. But when moves like this take place, there's going to be somebody who still figures out how to fraud the vendor system. No matter what, there's just creative people, but there's good people who are going to fall in this process as well.
Yeah. And if you look at both sides, everyone wants to make money. And as I read this is what's interesting. And there's actually one last slide. I apologize. Well, that's really brief, but it says benefits from roofing repairs in the near term with expansion into adjacent service. Now, what's interesting is when we looked at the previous deck, where was it on cross sells and upsells? It was listed up here somewhere. Yeah, here we go. Through a number of levers of cross sells, upsells, and expanded data monetization. Now, this data could be sold to, and this is just theory. I'm going to have a conversation on theory. The data could be sold to manufacturers. The data could be sold to distributors. Homeowner data could be sold to lead aggregators saying, hey, we have information that this homeowner's roof is so-and-so years old. And then now they're going to produce marketing because I know in all of my research, they talk about lead gen. So now you have a marketing database. You have the ability to monetize, especially if there's a percentage of revenue saying, we won't write your coverage because The other company that they acquired in this round, this quarter, which I'll just browse down to, where'd we go? Right here, of Assurance Bay. Again, this is for life insurance. It's data for life insurance. Their strategy is to get data that they can maximize every penny out of, because that's smart business. So if they're maximizing all of the potential value of that data, they could say, hey, we're not going to underwrite that house till you get a roof. But if you get the roof through our network, it'll be cheaper and we get the premium. And we now have that homeowner on board and we got a percentage of the roof replacement. There's also the possibility, I have no idea what manufacturers are thinking right now or distributors, but who knows if there's proprietary deals or pricing. I mean, we already know with MRP programs that there's ways to leverage bulk buying power. So things are gonna change in a really, really big way, is my prediction. And anyway, do you have any, you're chuckling at me and I'm like, so go for it, man. What do you have to say about all of my theories on how this could actually go even bigger?
I think your theories are correct. I'm going to go, and I actually think your theories are some ones that, I'm not saying they're not good theories or original, but there's some similarities in your theories to what I've already heard roofing contractors and people are thinking about and talking about. Some of the hype that's going on. Yeah, there's some stuff that's just outrageous. People have posted on Facebook. So I think that it is going to change the vendor landscape greatly. I think that we are going to see some players enter, some players get bought, some players exit. The amount of vendors that are out there are going to change. I think that they're going to start branching into some other pieces that house information. So if this was a good move, what is next? If this is 25% of claims out there, what's 15% of claims, and how do they get that? Right. So if they already have the ability to, insurance companies already have the ability to source and send out companies like, what are some of the mitigation companies? I can't think of, my God, Paul Davis, stuff like that. Right. So when there's water losses and fire losses, these companies that mitigate, what point do they start owning their softwares, buying their softwares? And now we do the exact same thing on that side. There's also this kind of idea that, look at what happened in the auto world, right? That what used to be, hey, here's 3 preferred shops, you go to these 3 preferred shops, in some areas has turned into this whole idea of, hey, here's the price for your repair, and this is the vendor that'll do it. If you go anywhere else, you're going to pay the difference, that type of stuff, right? Because you look at what players like Caliper Collision did on the collision side of things. So we could see things that where the roofing landscape and this hail and wind landscape becomes a little bit more like the auto and collision industry did as part of this. I think that the piece that in your prediction that I really agree with, that a lot of minds probably didn't jump to. As a contractor, you're thinking first about your business and yourself. I totally get that. But more accurate underwriting. Verisk does not own or have any affiliation in Nearmap. Nearmap does a lot of underwriting data for insurance companies. Verisk has Value 360, a whole system that does valuations in the underwriting. They've got a lot of deep ties into underwriting. So, and acquisitions in the underwriting space as well. But the ability to say that we know on average roofs are being replaced this frequency, this is how long they last. They now have a whole bunch of data in these homes. So when they were built, when they were replaced, things like that, that they're going to have more robust data that they're going to say, you know what, we just don't write roofs at 13 years, or we're going to write roofs for ACV at 13 years, or different amounts at 13 years. Like that's what we're going to do at this particular threshold or mark. I wouldn't be surprised if they start gobbling up other large chunks of data as they continue to become this data giant. So, at what point do they just fully commit to one measuring tool? The Eagle views, hovers, things like that can go straight in, but do they fully commit to one measuring tool that gets gobbled up as the next purchase point in here? And who has the most data from a measuring tool standpoint? When we look at consolidation as a whole, this is a really, really big move. But I do think that there's going to be more consolidation as far as measurements, weather data, other aspects. What's the next most common claims? There's going to be other things that Verisk is going to continue to go after. And I think that, we see the makeup. Verisk is running 57% margin. AccuLynx was running what, 55,
55 and
54%
change.
margin,
My memory's
right?
right. Yeah.
So what other things out there are going to have heavy data sets, streamline efficiencies, ability to augment across platforms, have similar margins, right? Because they're probably going to want stuff in that same margin family that is only going to help the insurance restoration side in two really big areas. And then the added benefit, like you said, profiting from multiple sides. Those two big areas are minimizing manpower, administrative costs, people, things like that, and maximizing retention, the ability to retain a customer. Because look, your claim's settled in 8 days and you don't pay your deductible if you use this person. That's a happy customer.
Yeah.
So I think that roofing contractors have some risk to maybe look a little bit more like the bad guy in this situation if they don't handle with finesse being in those networks, or how you sell when you are not in those networks. And I think that is there's a lot of things in that arena, but my predictions are we're going to see some more purchases. I also think that we're going to see the rest of the CRM space look to be the second purchase, or look to go the complete opposite direction. Never have any affiliation to it, right?
I think we'll see both. I wouldn't be surprised if we start to see a lot of marketing around, like, we're not going to sell your data, or, we're not going to, whatever the language is being used to describe people's sentiment towards this. And my views are mixed. They're mixed because I'm all for cleaning up the industry. And at the same time, I see a level of consolidation and control that to me feels like a little unjust. It's controlled by the very people that when they win, someone else could lose. It just some things just aren't sitting super great with me. But what I do really appreciate, John, about you and the work we get to do together is give the people we work with a first mover advantage to share insights. It's the place where people are first to know. We're sharing what we're doing in the first to act. And I know we'll continue this conversation in our community together, but starting right now, what is the strategy here for the future? Do you beat them? Do you join them? And how do you approach claims?
So I think there's a handful of strategies here. Number one, let's just take a few strategies. You overcome it, you lean into it, or you pivot, right? I think those are three things. And I have to give credit to really good people I work with. They use those terms in other trainings and sessions, how we look at things. So you lean into it. You figure out, how do I start aligning? How do I have a turnkey selling process that doesn't have a salesperson involved? Take those leads and still go out and work the rest of them around this. There's probably not going to be a way to consolidate all carriers into this program. And I think that's one thing that people didn't think about here, is that maybe this is really attractive for 25, 30, 50% of the carriers, but this will not be attractive to 100% of the carriers. Okay. In fact, it may be really, really difficult for somebody as large as State Farm, who covers 25% of the country, to feel comfortable having this more controlled by Verisk and AccuLynx and having a preferred network. That may not happen with them. Or they make it specifically for the big carriers, and it's not really efficient for the small carriers and doesn't work for the small carriers. So this isn't going to be 100% carrier adoption. And that's a key thing to realize. Just because Verisk writes a lot of stuff for all those carriers, I don't think we're going to see 100% carrier option, which means if I'm taking the lean into it strategy, I know that I'm really only leaning into a certain mark, a certain percentage of claims, because it's not going to be 100% of carriers. So I lean in, I accept that I've got a turnkey sale process, a set basic system that goes on that meets all their check boxes. I take those leads, we put them on, it doesn't run through anything else. And then I still run the rest of my business, how we lead gen and everything else. So that's the lean into it. The overcome, I no way I'm going to be part of this. I'm not going to touch it. I'm not going to do it. We either choose to stay away from those carriers, or have a way to try and sell around that feature or that benefit or that offer. And you just start building those systems. What makes you stand out? What makes you better? And then the pivot side of things. Pivoting looks so different for each particular individual. I'll give you a good example. A guy has his own, he does metal shingles. Okay. And he's done it so much with the manufacturer that he's actually listed as a manufacturer. So if people want to buy it, they can't because he's the manufacturer in that area. So he's made a really good like strategic carve out to put on a premium product that when he goes in on a claim and he's talking about it, he's not talking shingles. Well, the person who's going to get the $1,000 off the deductible, that's shingle to shingle on that shingle claim. But if you have made a pivot here to offer a premium product and you just go in with a premium product, like we don't even want to quote you shingles. This is problematic. We're actually going to give you this benefit. We have a financing option through our preferred vendor, and you do this, and this is what you get. It's only a $10,000 upgrade, or it's only this much per month. So I think that you pivot, or you have other home services. That's going to be the things like maybe you make your company more robust and you're all exteriors. You have HVAC, you have siding, you have gutters, you have landscaping. I don't know. There's so many ways you can pivot, but you need to start thinking as a contractor. I want to look in the details of what it's going to be like to lean into these programs, to overcome these programs, or to pivot and have something very unique that just makes me stand out.
Yeah, I love that. I couldn't agree more on defensibility and adaptability is the new strategy. And I don't believe it's black or white. I think it's a combination of things. And when we look at folks there's a lot of people abandoning claims, retail's the future. I get that. But it also means that if you are working, like the transition went from you do claims, you sell a contingency, the homeowner pays a deductible, it's done. And then it went to you sell a roof, the homeowner deals with the money, you finance it, whatever. Now it's retail, we don't do insurance, we handle everything like retail. Well, that game in this particular model, given we know that it won't be likely 100% adoption, but that game doesn't work anymore because now you are competing on a different pricing landscape with different benefits. So there's the join them pivot. There's the build a new model. The interesting thing, and I believe I started sharing this with you, John, I have begun the deepest research I've ever done in my entire life into the roofing industry, the trailing 36 months, the future 36 months, into 9 key categories. And one, I'm having conversations with some very high level people that you and I are privileged to be able to get access to, and get access to not only people, but information that most folks just simply can't. And in that research, I have found, and this part is publicly available, the residential roofing market is 75% asphalt shingles. The projection for that is actually decreasing as alternatives with higher ROI and lower maintenance become the wave of the future. That market segment is growing. A lot of the theories behind this is that when we look into the trailing 36 months, there was a lot of price shock with the price increases that have swept our industry. And if there's no one that doesn't know about those, which led a lot of homeowners to put Band-Aids on roofs, repairs, and push things off. The housing stock, the median age housing stock in America is 45 years old. And the boom of the 2000s is this new market of homes that are going to need a roof. In other words, roof replacements aren't going anywhere. They still project that one of the largest calls for roof replacements are claims.
Yep.
But in there, as homeowners aren't moving, the real estate economy or market is pretty stagnant at the moment, as we all see. And with folks not wanting to leave because they're locked in at a 2-3% interest rate, they want to stay in their home, they're more concerned about saving money now than ever before. As we also see, there are, I predict, stricter regulations on a county level. I know that there are some counties that are requiring Class 4 shingles. If you replace your roof, it is required to be Class 4 for building code. And I predict that in high fire risk areas, they might have different product requirements there. And homeowners have this, again, new appetite for higher end products that are going to last longer, to buy the last roof they're ever going to need. And I know that carriers have been discounting premiums on those. So I do believe that's also a pivot. So in a nutshell, I think roofing companies, the key strategy is adaptability. We don't know the answer yet, but it's to have it on your radar, decide if you want to join them or beat them or do both, figure out how you can compete in that world if you have to compete in that landscape. In that landscape, meaning a closed contractor network with different benefits to the homeowner, cutting costs where you can to maintain that level of competition while maintaining your margin and profitability, and also diversifying in your products and offerings to do things that network isn't really set up to do. So that's my 2 cents.
I very much agree with that. I mean, that's very aligned with what I said. I actually wouldn't be surprised to see some buy-ups of what I would call the lower cost premium products, the lower cost synthetics, the lower cost things. We're already seeing what you just talked about trend even before this buyout, that we have State Farm just did a massive notification of how they're going to change HOA, apartment complex, and communities coverages to exclude hail and wind, to drastically spike up hail and wind deductibles. And really, we've seen that HOA market very, very affected by a limited number of carriers that'll even write them in some markets, right? There's just so few options that you're now down to very few options, very expensive options. And they're going to make it to where State Farm can capture those audiences, but they pretty much have made it where your only option is to have impact resistant shingles, impact resistant roofs, fortified roofs, different systems. Basically, we're excluding all these things. We're going to make these things so expensive that you never file this claim. So the message there is you better go ahead and buy something that gets you a premium discount. And that way you don't ever have to worry about crossing that bridge. So we're seeing the policy landscape change to point to those things, not just the counties and the municipalities on those things. We're seeing people say we won't insure you unless it's this type of roof. And I know that there are people out there in the asphalt space trying to build systems that will be applicable when those policies come into play, that will alleviate some of the homeowners' concerns, that will alleviate some of the carriers' concerns on those. There's new tests that are going to start coming out from IHBS and ASTM because of some of these product changes that asphalt is realizing that we are seeing a decrease, not a rapid decrease, but a decrease in the number of roofs. So what happened in 2020? Everybody in COVID was like, all right, I'm home. They saw these problems in their home. It was a great time to sell. We hadn't seen all this disruption and changes, and people did a great job selling in that. Look at what happened in the early 2000s. We boomed, and we had the mortgage crisis and everything. We had that period between 2006 and then in 2020 where we had some different spikes and fluctuations in there. But you made a really good point. We had people between 2020 and 2023. So many people move, right? It was either I'm going to upgrade my home or I'm going to move because money was so cheap. If they wanted to HELOC, if they wanted to refinance, if they wanted to buy, money was so cheap. Now with money being double the interest rate, or some cases triple the interest rate that was accessible then, until we see that really drop or price corrections in the market, things like that, I still think we're going to see exactly what you said, a desire to stay in the home and make it a more permanent home, because it's better to finance through third-party vendors at 5.99% a home improvement than it is to go buy a new home at 6, 7, 8%. And now you've got a $500,000 bill for a new home for 30 years versus a 5.699 or 5.99% for 10 years for remodels and upgrades and changes that exist there. It's the era of upselling is here. It's now. It exists. These people want to stay in their homes. I've looked at homes. I moved to this home 4 years ago. I'm in that group that bought when it was perfect. You and I talked about this when I bought, right?
Yeah.
Every time I look at one, my wife's like, look at this home. I'm like, no effing way. The mortgage on that thing is going to be outstanding. So what am I doing as we speak? I'm remodeling my basement.
I got a project going on just outside.
You got one going on right now with the basement. I know where we're going next when we come up to the main level, right? Like there's the odds of us getting back down to that or even close to that in the next 3-5 years, as all of these things are going on, right, are very slim. So I highly encourage contractors to start getting savvy with who do you want to align with that is not asphalt. And I'm not dogging asphalt, guys. I teach in the asphalt space. I have an entire company that analyzes asphalt shingles. Okay.
Yeah.
I can tell you what I've seen change in asphalt shingles because I've torn. I mean, we get 10 to 20,000 samples a year. I've torn apart a lot of shingles. I've seen what's changing. I know what's going on. I'm deeply connected in that space. We're not going to see shingles drop from 75% to 50% rapidly. That's not going to happen. But it's going to continue to move that direction. And it's up to the contractors to realize some of these people are either locked in their home because they really don't have a better option, or it is truly their forever home. Yeah. Remember that when you go pick premium products. That is a better option to pay for than a new home.
Yep.
For 2 roofs in the next 5 years.
Yeah. I want to end on an exciting note because there's a quote by Curtis Chang: where there is anxiety, there is opportunity. And right now people are anxious. I'm optimistic. I'm optimistic about adaptability and creating a future-proof company that's both profitable and that you love. And it is doable. And as we analyze what's happening and we keep our eye on the future, we can even take in data. This is an interesting point that I'll likely do a lot more videos on. And I'm even thinking of releasing my research as a report. The shingle market is projected to grow 4 to 6%, mid to single digit growth, depending on who you ask. But here's an interesting thing that for the first time in a very long time and possibly forever, value is outpacing growth. Now, what that means is that even though residential roofing is set to increase, the value is going up, but the number of roofs is actually decreasing. And what that's showing is a higher average ticket price, more being spent per roof. So as we navigate these changes, it is up to us to use this opportunity of anxiety to spot this opportunity of anxiety to create new opportunities for us and build the company, not to resist it, but to say, hey, these are the changes and here's how I can position myself. And that's what I'm so passionate about working with our community on. John, you want to close us out with something special? You got the John Wisdom Hollywood eyes. I see it.
Don't live in fear, guys. This is not where you want to live. We want to live in awareness. And the quote, really, I just have to lean into it. Enjoy the anxiety you experience hearing this news. It's a reality. It tells me that you're aware, that you're paying attention, that you're listening, that you hear what's going on, but start looking for the opportunity. If you spend too much time on the problem instead of the solution, you will be one of the people that slowly continues to fade away. It's the people that are quicker to get to the solution that are going to continue to see success as we see the industry move through changes. So while we are all aware of the problem, and we're going to talk about the problem, we're going to comment. I mean, Adam, you and I just spent an hour talking about the problem. Okay. And you and I don't have roofing companies where we need to go build solutions. We have to build them for customers and people and peers and friends that we know across multiple states, across the entire country. So I don't get to experience the firsthand anxiety of it, but I do get to be part of what's going to be several hundred contractors' solutions as they move through them.
Yeah.
And the faster you start moving into the solution, we know the one problem. You need to start thinking of, in the 3 solutions that I suggested, are those the only 3 solutions, right? Lean into, overcome, pivot, right? What is the most viable of those 3? Oh, hell, it almost sounds like Dan Martell's 131, actually. Just conveniently, right?
There's not much new original thought in today's world. So it's how you
what is the
package
most viable approach in those 3? Is it a little bit of lean into and the pivot, like have a bigger offering, and then start working on the most viable of those solutions for you as you go through it. So enjoy the anxiety. Talk about the problem. Talking about the problem, you're going to hear insights from peers. So your friends in the roofing space, enjoy it. Okay. Embrace it for a little bit. An anxious person is a little more concerned and aware and alert of their surroundings. So you should feel a little anxiety. That's a good thing.
Yeah.
Turn it into opportunity quickly.
Yeah. And I got to add, I do feel the anxiety because even though I don't own a roofing company, I have hundreds of roofing companies that rely on me.
What's our inboxes look like right now?
And thousands of team members that we actively support every day in the trenches, which is why I'm so invested into pivoting and reinventing myself into looking what's the future move. Things are moving so quickly that, as Zach Cass has said, one of the authors of ChatGPT, when I got to see him speak, is adaptability is the new strategy. So, John, thanks for joining me here. I'd love to hear your predictions in the comments below. Share, what do you think? This is good? This is bad? What's going to happen? How can you adapt? And John, I'll be seeing you inside RSRA again very soon. Thank you again for being here. Until next time.
Thank you, everybody.